Hi, welcome to this video, which is all about best Forex trading strategies for the year ahead, 2020. I'm just giving my general views on how I think the markets might be and the best strategies, obviously, to use. I also want to reflect on 2019 as a trading year, what we learnt from the year just gone by or nearly gone by, how we adjusted our trading strategies in the year, which will influence us when we come into 2020, what we did right and what we did wrong as well. Now, in terms of where we are now, end of December, a lot of traders, they're packing up. They're going to come back the end of the first week of January. I said it in many videos recently, a huge mistake. Why? Because traditionally, the final week of December, first week of January, very volatile, and you'll tend to find, you can check this back over 50 years if you wish, that around 70% of Forex pairs are going to set their high or low for the following year in this period. Now, if we go back to last year, I was saying that same fact, getting ready, end of December, January. We had a great time. Market's nice and volatile. We're heavily focused on the yen, pushed our account up by 20%. Thought this is going to be a stellar year. And I was totally wrong about that because it didn't continue in that way. We had good periods, we had bad periods. I'm sure a lot of traders who traded last year will agree with me. It was challenging. Yes, almost challenging for a while because of the lack of volatility. That really made us have to, kind of adjust the way we traded. It's influencing us in terms of coming into 2020, although I do think the markets are going to undergo some changes this year. I think the year ahead will be very different to this year. Now, I've written up all these points on a storyboard, so I'm just going to discuss them in more detail. So let's go and take a look at them. Right, let's just have a look at some points in relation to the year gone by and the year coming up. Now, in terms of 2019, generally low volatility in Forex pairs, particularly in the majors. I mean, volatility very low, and in Euro USD, just basically historic lows. When you've got really low volatility, it's very difficult to make money, no matter how good your strategy is. Yeah, most strategies in Forex, the overwhelming majority, will need high volatility. We didn't have it in the majors. And, if you're just trading the majors this year, it'd been tough. If we'd have just traded the majors, I don't think we'd have made any money overall, or just a minor amount. You need to be looking at a lot of pairs. I'll come to that in a moment. Now, why have we got such low volatility? Well, central banks have dampened liquidity with stimulus, printing money. They've flooded the financial system with money, and that basically means, volatility low. Also got no inflation in the world. That's keeping volatility low as well. Now, in terms of will it change in 2020? Well, there's so much liquidity in the global financial system now, it's dangerous. And central banks are running out of stimulus effectively. They've got to put a cap on it, okay? And Ray Dalio made a quote. He said there was only a limited amount of stimulant left in the bottle. There is. Now, in terms of stimulus, you've got all this money in the global financial system that's inflated asset prices. It's dangerous, okay? And now it's going to be reduced. You've seen it already in Sweden, for example. They moved away from negative rates for a central bank really recently to do that. You've got the Bank of Japan wanted to cut back on their stimulus. They've done the biggest stimulus package against GDP in history. Central banks are seeing the dangers. And there's going to be a move to fiscal stimulus, i.e. building projects, government funding, that sort of stuff, rather than just relying on cheap printed money, giving it to banks and allowing them to inflate asset prices. Now, in terms of 2020, you've got a very fragile global financial system. You've got volatility that is just very, very low. I personally think it could increase dramatically at some point. A lot of people talk about stock markets crashing. We've heard that story for a good few years. I personally think stock markets will have a crash at some point. We just need to be prepared for it when it comes. But I definitely see a really good correction coming in stocks, which will trigger higher volatility across financial assets and Forex markets generally. So this year, global financial system fragile. What's going on is dangerous in the global economy. There's no growth, lots of debt, etc. So looking for the volatility to pick up. Now, in terms of strategies, performance 2019 and outlook for 2020, strategies that we use don't really change. Okay, just certain tweaks are made. Okay, now in terms for anyone new to our videos, we're not really just pure technical traders. Okay, we've got one sort of technical trading setup we'll look for. Okay, but that's the only one really. I'll come to that in a moment. I think technical analysis are very hard in recent years. There's not many technical analysts left. Most traders are using at least some sort of fundamental analysis or sentiment analysis with their technicals. Professional traders have just got away from technicals. The only really big area of technical analysis left is high frequency trading programs, the lightning fast computers that banks and hedge funds have. You can't compete with them as a retail trader. Okay, now in terms of we like to trend follow. Okay, so we're after big trends. What I would call macro trends, when you've got fundamentals clear cut in favour of one currency over another, you just hold the trend. And there are some decent macro trends around, but also what you tended to have in a lot of pairs was, you spot a trend or potential trend, you get into it, and then it would just suddenly stop or go slowly or go sideways. So we have to tweak to compensate for that. How would we do it? Well, generally, week or two, the trend not going anywhere, just come out. It was grinding, but low volatility in our favour. Just reduce position size and then come back in when the volatility picked up. Okay, so basically changing exposure. There's not much you can do about it when you have a trend just isn't moving quickly or it stalls. You've got to decide, is it going to go on longer term? Should you stay with it? If we decide that be half size, many instances we just came out if the trend wasn't clear cut. Okay, swing trading volatility. Now, in terms of just pure technical setup, this does work well in high volatility. It's selling big price spikes to the upside or buying big price spikes to the downside and looking for prices to revert to a mean price. Now, we would do that with Bollinger Bands. There's many different ways of doing it, but what I tended to find with a lot of the swing trades that we did, volatility picks up. Okay, you get the spike and you're looking for a big spike up and then back to the mean, or down and back to the mean, and then you just get a stall. So it's like a slow reversion to the mean. Then of course it chops sideways. The mean price, or in our case a moving average, will come up. There were some decent swing trades around, but that strategy was not that successful for us in terms of against previous years. We need volatility to pick up. Okay, I've made that point clear already. Sentiment trading. For people who are interested in looking at the fundamentals too deeply, we always recommend the COT Net Traders report. If you're unfamiliar with it, you can look up on our channel COT Net Traders Indicator. It's a smart money tool. We can see where smart money is positioned against speculators. When the smart money diverges from speculators, go with the smart money. And at the start of the year, first half, a lot of good setups. Okay, second half of the year, as the volatility dropped down even more, very few good setups in the COT Net Traders positions or less. But we did get some really good trades out of the COT Net Traders, and it's a core part of our strategy and will be obviously next year. One thing I'm going to bring in to our strategy is focusing a bit more on gamma, which is to do with option pricing and risk. And what speculators have in the option markets and so forth. I'll do a full video on it, but used to be an options trader. I do a lot of options trading, and yeah, it is useful as a sentiment tool. I think, yeah, new year, I'm going to make more use of it. I don't know if I just said it. I'll probably put it in with the COT net traders positions. Now, in terms of selection of pairs, I think that was the key for us this year. We made a lot more money outside of the majors, made a lot of money or good money in the crosses, and some really great trades in the more minor pairs, the ones that traders don't really look at. And I've often said it, I think it's a mistake just to focus on the majors. You want the best opportunities, and they very often come in the crosses and more minor pairs. So it's the more pairs that you look at, the better. We look at like 50 basically a day. We won't trade them all, but we'll select out the ones that we feel are the best. And yeah, that really helped us this year, and it just will help you in any year. Just get more opportunities. The ice at the centre of the lake, frozen ice theory, which I'm a big fan of. You're seeing it now, actually. If you think of a lake, the ice is very solid at the outside, and in the middle, it's a little bit thinner. And traders have gravitated to the centre of the lake. And what that means in Forex trading is they've gone in to what I would call junk currencies and built up big long positions, generally to get yield or carry. And they're just very vulnerable. Okay. Also, you tend to find when volatility is going to pick up, it'll pick up in the kind of emerging market currencies or exotics or whatever first. It's a warning. Volatility is coming generally to the majors. The thing is, we're coming to the new year. A lot of traders are long what I would call junk. That's just because they don't expect volatility to pick up, all the stimulus and so forth in the system. It's all going to end, in my view. So keep your eye on the more minor pairs. Focus on the concept. This is just general trading advice. One good trend pays for them all. What I mean by that is it was a few good trends really helped us this year. First part of the year, January, for example, big trades in the yen. Last few months of this year, really great trades in the British pound. You have nice and volatile, made great money out of the pound. Last 3 months, that was our main winner. But you don't need many big trends. Got good risk control. Okay, a few good trends will really help you. You want to focus on holding those winners, like thousands of pips. Okay, and that's basically, I know it's a simple concept. That one good trend pays from all comes from head. Sakota, one of my favorite traders. You want to be measuring. It's just for beginners. Measure your performance over a realistic time span. Traders get frustrated if they're not making money in a month or 2 months or whatever. We had a 2-month losing period. But that's just the way it is. That's the way it is for any traders who are successful. They're going to have a month, pretty common to have a month drawdown, 2 months drawdown. Measure your performance over the year. And over the year, I think we made a big money in only 3 months out of 12. Okay, we had money in other months as well. But it was 3 months, really, that gave us most of our profits. And most of our profits came from a small percentage of our trades. So you're in it for the long term. Don't get frustrated. Stick with that long-term vision. What I got wrong and right in 2019. I think what I got wrong in 2019, if I was being self-critical, I did stick with my risk-off strategy. I missed quite a few risk-on trades because of that. I think I took too many trades as well. Okay, I know I'm looking back in hindsight, but some trades I should just kept my size down. My sort of number of trades down. What else did I get wrong? I probably got a good few things wrong, actually. Can't think of any really major others. But I think I did do a few too many trades, and I did have a bit of confirmation bias, a bit slow to shift my opinion on a few occasions. Also, what I think I did wrong was I didn't focus enough on carry trades. Yeah, I'm focused on carry, but I didn't do the big carries trades, and there was a lot of money to be made in them in the year gone by, and I didn't make any really from that style of trading. Yeah, carry trading is big. I should have been a bit more focused. What I got right in 2019, very good at preserving my base. So my principal capital, I didn't fall too far behind at all. In fact, we got off to a good start in January, and we stayed up all year. Okay, we gave back profit along the way, etc., and we didn't make as much profit as we wanted. But yeah, I felt I got that right. Um, and I feel that a lot of the trades that we did pick out, lesser looked at pairs, did well there as well. I think, if I was scoring myself, I'd go for a B minus in terms of my performance. I think I got a bit frustrated at times, but the markets, they're just not user friendly. But having said that, it was an okay year. It's not a vintage year, obviously. We haven't had one of those for a few years, but I think 2020 might be. I'm really looking forward to 2020. So we'll see what it brings, but hope you found my little summary useful. Thank you very much for watching me as usual. Take care and have a good day.